Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
You're listening to the IRS Radio Hour with your host, Attorney Stephen Leahy, on AM560 The Answer. Tune in every week at 5 for an informative discussion about IRS obligations, credit card debt, mortgage default, collection activity, and how to resolve these legal issues using tax resolution, debt settlement, mortgage loan modification, foreclosure defense, and bankruptcy. Your host is Stephen Leahy, a Chicago attorney and the principal at OPM Tax Resolution and the law office of Stephen A. Leahy, PC. Stephen is the author of Deal With Your IRS Problems Today. IRS and debt issues are serious, but there is help. There are resolutions. So get ready and take notes during the IRS Radio Hour. And now, here's your host, Attorney Stephen Leahy.
Hello, Chicago. I am your host, Attorney Stephen Leahy, and you're listening to the IRS Radio Hour on 560 The Answer. We do help people with dealing with IRS problems, audits, levies, liens, garnishments, collections, and payroll tax issues. We also deal with mortgage foreclosures, loan modifications, bankruptcies, and other debt-related issues. So if you have these problems, or if you know someone who does, you should contact me. I want to introduce my co-host, Jim Leahy.
Welcome back, everybody. If we're here, it means it's Sunday at 5 o'clock on AM560, The Answer. This is a show about the IRS, financial troubles, but we also are a local show, so we get into some politics, a little bit of sports, local news, and national news, and stuff about the family. It's a local show because Steve's a local attorney, and that's the important part of one of the reasons why he has a show here, so that people understand that it's important to get a local attorney and have somebody who's in the area that you can see. And how can they find you, Steve?
Well, you can always find me on my, first I'd say, visit my website at chicagotaxteam.com. But you can always call my office at 312-664-6649. You can say, if you have a question or if you have any comments, feel free to send us an email at questions@irsradiohour.com. What's in the news this week, Jim?
Well, this week is a Friday. The 6th of June is the anniversary of the 70th anniversary of D-Day. We would like to pay tribute to a lot of the veterans are disappearing. There are very few of them left. But the ones that are there, we'd like to say thank you. And
absolutely. Thank you. And, I think getting ready for this show, I had done some research on D-Day. We found some interesting statistics, didn't we, Jim?
We really did. We found out that 156,000 men landed on the beaches that day. 156,000.
Wow.
Of that 156,000, 73,000 were Americans. There were 6,939 ships involved.
Amazing.
Unbelievable. The amount of that must have been. It's astounding. And as we talked about before, on Memorial Day, we like to talk about medals of honor, and you find out that 12 medals of honor, all but 3 were given for posthumously for the Battle of Normandy. On the invasion day, there were 4 given out, including one to the son of a former president, Teddy Roosevelt Jr.
Teddy Roosevelt Jr. was on the beach.
Imagine that.
Died that day.
That is
insisted on being there.
Yes, he did. He had to lie to get in, according to the movies.
According to the citation too.
So it's a remarkable thing, and that is the greatest generation, and they got that name for a reason. And which makes the ongoing VA struggle all the more horrible.
I agree.
Because those guys are deserving of a lot more respect.
But we're not talking about the VA anymore, Jim. That issue's over.
Well, that's Sergeant Bergdorf or whatever that is. But I have to say one thing. These listeners are powerful, because when we spoke about allowing the VA to let the guys go to the private hospitals, not a week went by. Before they changed.
That's right. The listeners are awesome.
Before they changed the rule. So you guys out there are unbelievable. I mean, what a bunch of listeners. And so it's true that they did change. They changed, or at least they're in the process of changing. I saw Senator Sanders, the socialist, along with John McCain, on TV this morning.
Quite a pair.
Yeah, quite a pair. On TV this morning talking about just that, allowing these guys to go. To their local doctors if they're more than 40 miles away from a VA center, or if they're on these waiting lists. But another problem I saw is that in Arizona, they admitted that 18 guys probably died on the waiting list. So this is
important stuff.
It is important stuff, and it's important that we stand up for these veterans, and especially, they said that was 70 years ago. Even the youngest guy, who was 16, would be 86 now. So, I mean, it's a long time ago.
Not too many left.
And they deserve all of our veterans deserve better. So,
I agree.
So things seem to be moving on. Now, last week, we're going to get into some things this week. We'll talk about your blog. We'll get into a little bit more news. Of course, our ongoing saga of the IRS, and God bless them, they give us something to talk about every week, don't they?
As the IRS turns.
That's right. I'm going to start naming them. Yeah, that's right. It's unbelievable how this net is starting to ensnare more and more people the more we look at it. We know about what happened this week with the president and them exchanging terrorists, the 5 terrorists for out of Guantanamo. So there's, a lot happened this week, and
we're also going to talk about, again, my blog post. Mm-hmm. We do a story on it.
And where would they find your blog post?
Well, my blog is at chicagotaxteam.com, and I write an article every week, and there's other things on the blog that we post. We post videos about explaining things like installment agreements and a lot of other tax-related issues about what they are and how they work. And there's little videos, 2-minute, 3-minute videos that explain these things to people. And so if you're interested, if you have an issue and you want an explanation, it's a good place to go, our chicagotaxteam.com. And there's a blog there, and go to the blog and you'll see.
And if they wanted to ask you a question or leave a question for the show, where would they go?
You can go, first you pick up the phone, call me. And
what's your phone number?
I'm available. So my phone number is 312-664-6649. I'm going to say I'm available. I don't actually answer the phone. Okay, so somebody else answers the phone. And her name is generally Bonnie answers the phone, and she's always happy to set up a time to talk to me. She knows my calendar better than I do. And so she sets up my calendar and makes appointments for people to talk to me. And so if you have a question, or you have a friend has a question, or any kind of issue relating to debt, as we talked about at the top of the show, you should call me, and I'd be happy to talk to you.
Do you have to go down? I mean, what if I can't make it downtown?
Well, remember, we talked about this a couple weeks ago. We talked about my online consultation is where we have a camera. You don't even have to come downtown. It's always nice, even though I'm local, that you don't have to come downtown. A lot of people don't like to come downtown and fight the traffic and come down to see me.
Well, what if I didn't have a camera?
I send you one.
You would do that?
That's right. I send the camera out. And so that way I can see you and you can see me, and we can all look at the documents, and it's a much better way to talk to a lawyer than talking to somebody on the phone that you're never going to see, that you can't even judge. It's actually easier to judge someone when you're looking at him and listening to him.
If I wanted to come downtown, where would I go?
I'm at, first off, you shouldn't just come downtown.
I mean, if I wanted to come to the office.
Well, my office is at the corner of Randolph and Michigan.
Is there parking there?
There is parking right across the street from Marshall Field. Remember, we talked about that last week.
We did. Is that Marshall Field?
That's Marshall Field. Some people think it's Macy's. I think they do. They did put a fake sign up there that says Macy's, but it's still Marshall Field to me. So, and remember, I think we were talking about the name of the building last week, and I checked into this, and the name of my new building, the new name of my building is the Crane's Communication Building.
Oh, from Crane Chicago Business?
That's right. They moved into our building, and part of the deal was they got to name the building. So
it's a stone container building.
The stone container building. Right. I found out that before it was a stone container building, it was the associates building. So, but anyway, but always feel free to give me a call at 312-664-6649. I'm always available to talk to you, answer your questions. That's what we do. So.
And the website is, again?
It's ChicagoTaxTeam.com. And, so feel free to visit the website, look at the blog, read, see what's going on. And remember that you should always visit us here on Sundays
at 5 o'clock.
At 5 o'clock.
And I'd like to point out that the Blackhawks no longer are playing. I think you put the kibosh on them the first week when you predicted the win.
It wasn't my fault. So we're going to take a break, and we'll come back on the other side.
See you on the other side.
Welcome back to the IRS Radio Hour with attorney Stephen Leahy. Stephen has helped hundreds of Chicagoans recover from financial disaster, and he wants to help you and your family. There are resolutions, and you will hear about all those resolutions during today's informative discussion on the IRS Radio Hour on AM560 The Answer. Now, here's your host, attorney Stephen Leahy.
And welcome back. I am attorney Stephen Leahy, and we're here at the IRS Radio Hour, and we're talking. We're going to talk about IRS issues.
Steve, I went to the blog this week, and I was reading something. I read your article about was a trust fund recovery, I think.
Well, yeah, I wrote an article about this. One of the reasons why I wrote an article about it is because it's coming a lot in my office. I've seen this so much in the last couple of weeks that it's at the front. It's called the tax fund recovery penalty. It's actually not a penalty. It's something. If you're running a business, if you're paying your employees and you're taking out taxes for your employees, this is something you have to know about, because many people come to see me because they're behind in their 941 payroll taxes.
And what is that?
941 payroll taxes are made up of three components, and those components are the federal taxes that you take out of your employee's paycheck, the Social Security and Medicare portion that you take out of their paycheck for their retirement benefits, and then the government or the employer's contribution to Social Security and Medicare. So at every quarter, a business who has employees is to file a 941 return with the IRS, telling them how much their payroll was and paying this money over to the IRS.
Mm-hmm. If
in fact you don't pay that money over, then there is a payroll tax problem. And again, this is the first step, and many people come to see me because their business is having payroll tax problems. They're not paying the IRS, and they need to because the IRS can come to your business and shut you down and won't let you operate your business anymore, because they don't want you to keep running up these bills that you owe the IRS, and you're not paying them, so they don't want it to keep.
Are they being more stringent now, or what's the reason why this is?
They've always been very stringent to the IRS with these payroll tax issues, and there's a lot of issues when it comes to payroll taxes, because if I miss a quarter of payroll tax and then I pay one quarter, and then I miss another quarter, and then I pay another quarter, the way that the IRS can come up with what the penalties are, which are enormous. I mean, they really can change the way your business operates, right? If you're already having financial problems, because people who are having financial problems, maybe sales are down, and they think they can borrow this money from their clients, or not their clients, but their employees, right? They have this employee money, and they're using that money to keep the doors open instead of paying for their employees. And that's always a problem. But the trust fund recovery penalty actually is when the business doesn't pay it. The IRS changes their focus from the business to what they call a responsible party.
And that would be?
The IRS defines a responsible party as one who had the duty to perform or the power to direct the act of collecting, accounting for, or paying over trust fund taxes. Now, they're called trust fund taxes because the employer holds that money in trust. It's not their money.
So what they're saying is that the employee could be held responsible?
Well, an employee can be held responsible for this, and so it's not always just the owner or the manager. If I'm an employee and it's my job to pay the IRS, to do the paperwork and pay the IRS, then they can hold me responsible too, personally responsible. And that's the trust fund recovery penalty part, is that they look for the responsible party. Now, an owner of the business is almost always going to be a responsible party. If they find more than one responsible party, they can go after both of them for all of the tax. So they want to cast a very wide net so they can go out and try to collect that money, because the employee still is going to get benefit for these taxes, even though the IRS never received them. So they're still going to get benefits in your Social Security. They're still going to pay them, but they're going to go after the responsible parties and the business. So when they focus on the business, they're looking at the business assets. So what are the receivables? What are what other assets does the business have? So they can take those assets, convert them to cash, and pay this debt that's the business owes. Now, most people, they prepare a company, a corporation, in order to put to limit liability, right? That's what some of them are called, limited liabilities companies.
LLCs.
Corporations are to insulate the owners from business obligations. But this tax fund recovery penalty pierces that. You're not protected personally. When they get a tax fund recovery penalty, and again, this usually goes into when someone comes to see me about payroll taxes, they generally go into two cases: the business case, which is the 941 taxes, and then the IRS looks to the responsible party, and it becomes a personal income tax problem with this trust fund recovery. Okay, so this is, again...
then they go after your business taxes and then your personal.
And then they go after your personal assets. So whatever you have, your wages, any money you have in the bank, your 401k, your house, your car, whatever it is, they can go after all of that to recover this money. And so you're not insulated as a business, even though there's a corporation, even though there's a limited liability company, they can still target you specifically, individually, to come after you and get that money. And that's important. And again, it's a trust fund because it's not the business owner's money. Mm-hmm. And so another big part about the trust fund recovery is, okay, so if my business is having problems and I'm not paying my 941 taxes, so I'm probably having some financial problems personally also. And if my business goes under and the IRS comes and closes down my business, I'm probably going to try to seek bankruptcy protection from all these other debts that are out there. And one of the problems with the trust fund recovery penalty is it's not dischargeable in bankruptcy. You can never get rid of it. So they're going to come after you for it, even though you filed bankruptcy. So that's an important distinction. I think that's something that people don't really realize when they have this business, that just because you're in business and you have a corporation or a limited liability company, you're not always protected from the business debts.
So that's why it's good to have an attorney to be able to explain these things to them.
Absolutely. And I think, again, when most people come to see me about 941 taxes, they don't even realize that this tax fund recovery penalty is even out there or a possibility. And when we start talking about it, so one of the things we want to try to do initially is try to get to the business to try to pay off these debts right away before they impose this trust fund recovery penalty against the individual. Because once they do that, they're going to start collecting from both of you. And that makes it really difficult because you might have to come up with two payment plans then, one from the business and then one from the business owner's personal assets. And so it makes it much more difficult to make that happen.
So do you negotiate with the IRS before they levy the penalties?
That's what we try to do. That's what we want to do. Now, you can't always be successful doing that, but that's the goal, is to try to protect the client from as much of the tax obligation personally as you can, because it's so important that people understand this when they have employees. Usually the last thing you want to do is use the 941 taxes that you're holding for your employees to pay other debts to keep the door open. I mean, it happens all the time, but it's not a good source of operating capital. No. And again, people look at it that way. And then when you see what the penalties and interests are for violating this or not paying it on time or not filing on time, it's substantial. And again, it's probably going to be the end of the business. Not always, because a lot of times businesses do rebound and they can make those payments, but and come up with some sort of installment agreement with the IRS.
Well, so this has been their focus because they've been they say that they were $14 billion in delinquent Social Security, Medicare, and individual federal income taxes. Mm-hmm. That's what they were claiming anyway, as of last June. So they put a special.
Well, again, they're starting to focus more on comparing when a business owes 941 taxes and to the individual and trying to pair them up so they can collect.
Well, that's So how could somebody contact you?
So if you have a business and you're having your problems with your 941 taxes, you should contact my office, and my telephone number is 312-664-6649. You can visit us on the web at chicagotaxteam.com. You can reach me by email at questions@irsradiohour.com.
Or you can listen here on Sunday nights at 5 o'clock on AM560 The Answer.
That's right. And we're going to take another break, and then we're going to come back, and we're going to talk about questions that
see you on the other side.
You're listening to the IRS Radio Hour with attorney Stephen Leahy on AM560 The Answer. Attorney Stephen Leahy brings his passion and expertise to your radio each and every week during the IRS Radio Hour. Tune in, take notes, and be educated. Learn your options resolving financial obstacles that face so many. And now, back to the IRS Radio Hour with your host, attorney Stephen Leahy.
Hello, and I am your host, attorney Stephen Leahy, and you're back on the IRS Radio Hour with my co-host, Jim Leahy. And
welcome
myself.
back, everybody.
And, so people don't think that this is organized. I mentioned that we were going to talk about questions, but this is our
ongoing saga segment on the IRS.
As the IRS turns.
That's right. Every week they keep giving us more and more content, and God bless, not really God bless them, because this is kind of dastardly.
Yes, I agree. I love that word.
Yeah, me too. That's why I used it. This week, there are reports that it started...
Well, before we talk about this week, let's talk about last week. Because like any other saga, you have to talk about what happened last week and then lead into this week. So last week, we talked about the IRS and the emails which linked from Cincinnati all the way to Washington.
Yes, and it was Senator Carl Levin was implicated, and he was the only one they mentioned. Now, this week, a group called the Center for Competitive Politics has filed a complaint with the Senate Ethics Committee on 9 Democratic senators. The group includes, who do we have here? Our own Senator Durbin, Senator Levin from last week, Senator Schumer, Senator Franken, Senator Sheehan, Senator Udall, Senator Whitehouse, and Senator Bennett, Senator Merkley from I believe Washington,
he's from Oregon.
From Oregon, mm-hmm. And the reason why this was filed in the Ethics Committee is because these senators have all used their offices to target private groups and individuals.
That's right. The complaint says all of these actions appear to have been undertaken for electoral rather than official purposes. Senators Durbin and Schumer, in particular, have openly stated as much, the complaint says. Additionally, Senator Levin's repeated requests for information after being explicitly informed that the information could not could not lawfully be disclosed, violate paragraph 2 of the Code of Ethics of U.S. Government Service.
And Senator Durbin, I know, because I kind of followed him this year, and he's
a senator from Illinois, isn't he?
He's a senator from Illinois,
and he's up for re-election.
And he's up for re-election. Yes, he is.
That, yeah.
And he's running against Jim Oberweis here in Illinois. And the thing about Senator Durbin was Senator Durbin pointed out a private individual, even more than the group. It was a private individual. It was Karl Rove, and I know people think Karl Rove is some kind of devil or something, but even you Democrats out there have to admit you don't want the whole power of the federal government being put on one person.
We talked about this before because, power shifts and people have...
That's right, eventually. So, our senator said, well, he's only doing that in response to something that Karl Rove said in an article. But it was found out that the article wasn't written until 2 weeks after the senator had taken to the floor of the Senate demanding that the IRS investigate. So this isn't just... this was a concerted effort by the Democratic Party and their senators to use their majority
to silence their
critics. And speaking of, they're always talking about voters' rights and voters and making sure everybody gets a chance in the electoral process, and that they don't want people to have IDs because people can't vote. What they're doing here is scaring everybody to death. I mean, these groups. The Tea Party groups and any group that had Patriot with the name there have all been scared to death. Most of them were turned down. They've been audited. The audits are coming through. It's a shame.
It is a shame, and I think the IRS sometimes, as everybody knows, the IRS is the biggest, baddest collection agency out there, and when they get on your tail. Most people will do whatever they can to avoid that. And if what you have to do to avoid it is to keep your mouth shut and don't talk about politics,
that's right.
Well, that's what a lot of people will do.
Well, of course, families will get together and say, is this really worth risking having the IRS have me in their sights?
Or the young lady from Texas who had more than just the IRS, right? She had a bunch of federal agencies visiting her manufacturing plant after she tried to. So it wasn't only the IRS, but other agencies also.
Well, it reminds me of a lot of one county here in Illinois that's run by one party for 80 years, and they control all the levers of government, and it is not only is it intrusive, but it is scary.
Well, should we be concerned about mentioning that on the radio?
Yes. Well, yes, we should. But not.
I agree.
I mean, it is kind of scary, isn't it?
It is kind of scary.
To think that they have that kind of power over you and your business and your family.
And nobody's so small that they don't care about you.
That's right. And this is why you have to have an attorney.
That's right. And a local attorney. And I'm a local attorney.
And you understand that.
That's right. So I'm here in Chicago, and you can visit my website at chicagotaxteam.com. You can call me at 312-664-6649. You can listen to us every Sunday at 5 o'clock on AM560 The Answer.
And we will help you out and answer your question.
And we'll take another break.
Welcome back to the IRS Radio Hour with attorney Stephen Leahy. Stephen has helped hundreds of Chicagoans recover from financial disaster, and he wants to help you and your family. There are resolutions, and you will hear about all those resolutions during today's informative discussion on the IRS Radio Hour on AM560 The Answer. Now, here's your host, attorney Stephen Leahy.
I am your host, attorney Stephen Leahy, and we're back here in our questions section.
That's right. This is our listener questions segment. And the question we have today is, I'm a cab driver, and how can the IRS determine my income? It seems that the IRS changed the income amount on their own. Is this possible, Steve?
This is important because I don't think a lot of people understand this, especially these careers or jobs that deal a lot with cash. So waitresses, taxi cab drivers, limo drivers, bartenders. That's right. That the IRS looks at others in a similar situation and determines what your income should be based on some factors. So one of the factors in this case would be they would look at how much gas did you buy? Okay, I bought that much gas. How many miles would you have to travel with that gas? And then what would that income be if I traveled those miles? And oftentimes the amount that they come up with is different, vastly different than the income that you reported. And then they will impute that as income to you. So now they say, I might say that I made $45,000, and they might say, no, you made $70,000, and then tax me accordingly.
Mm-hmm. And most people don't, or at least in those jobs, don't keep the kind of records that are needed, do they?
Exactly. And when you get audited and you come forward and you don't have records, because the detailed records that the IRS really requires, very few people keep.
Until they get audited.
That's exactly right. Those that have been audited then will start keeping these records. But it usually takes an audit for people to start keeping the records that are necessary to fight the IRS. Because without records, you really don't have a case. And it's hard to argue with the IRS about something when you have no records to help. And this, it's not only the federal government that does this, is the state of Illinois also does this. So I've had cases where, for instance, I had a case where someone had owned a liquor store, and what the Illinois Department of Revenue does is they go to your vendors and they audit your vendors. So how much booze did you buy? And the same thing with bars. How much did you buy? What you should have sold it from those bottles, what that income would have been, what the taxes should have been, and then they assess that amount as taxes to you. And again, usually that's vastly more than you think that you reported, or that you actually probably really made. And so it makes it very difficult to operate the business afterwards.
So what you're saying is that unless you have these records, then the IRS really is in charge, and they can adjust whatever they want.
That's right. And if they, in this particular instance, they had assessed it to this taxi cab driver $20,000 or $20-some thousand, to fight it in court would cost much more. Mm-hmm. And because you don't have records, you're probably going to lose. So you're kind of in a no-win situation when the IRS starts auditing you when you're a cash business. And again, this questioner did not understand how is it that I reported the same amount for 3 years in a row, but my taxes went up each and every year. And again, that's because of the amount of gas that you said you purchased, and you wanted to deduct it as a expense, rightfully so. And so they look at that expense and say, well, this is what you should have made given this expense.
Speaking of expenses, we talked about this before we came in. There was a case of a guy who gambled.
Absolutely. And this is very similar to this. And
this is the case just for Illinois. For people from Illinois should know this.
That's right. Because if you're a gambler, and I had a client who was a gambler. He also happened to be a taxi cab driver. And he liked to gamble, and he went to Indiana a lot and gambled. He won $150-some thousand in gambling, but he lost $200,000 in gambling. But here in Illinois, what happens is Illinois taxes you on your adjusted gross income, and on your federal tax return, you have an adjusted gross income, and then you can deduct things like gambling losses. And under federal law, you can deduct your gambling losses up to the amount that you won. So you can offset all winnings by your losses. Well, because Illinois bases your income tax on the adjusted gross income line, that line doesn't include any deductions. So here this gentleman had to pay Illinois income tax on the amount of his winnings, regardless of his losses. So they imputed income tax on $156,000 in income that he never really had, and it's devastating, and it really can change whether you should gamble.
Well, that's
you're gambling. Don't gamble with the Illinois Department of Revenue.
That's right. They're not going to let you off of it. But that's Illinois law, right?
That's right. That's Illinois law.
Which is why it's important that people around who hear us right now know that going to that boat, anything you win going to one of these casinos or whatever, that's going to be on your...
You're going to pay taxes on it.
You're going to pay huge amounts of taxes no matter how much you lose.
That's right. And that's why it's important, again, to have a local attorney. And I'm a local attorney. I'm right here in Chicago. My telephone number is 312-664-6649. You can get me on the web at chicagotaxteam.com. Send me an email at questions@irsradiohour.com.
And it's Sunday night at 5 o'clock.
That's right.
On AM560
The Answer.
You're listening to the IRS Radio Hour with attorney Stephen Leahy on AM560 The Answer. Attorney Stephen Leahy brings his passion and expertise to your radio each and every week during the IRS Radio Hour. Tune in, take notes, and be educated. Learn your options resolving financial obstacles that face so many. And now, back to the IRS Radio Hour with your host, attorney Stephen Leahy.
And welcome back. We just did the listener question segment, and I want to encourage anybody who has a question. I'd like to feature it on the show. So call me or write me or email me at questions@irsradiohour.com, and I'd be happy to feature that question here on the show, answer your question, and make sure that you get a good answer. First, I also want to thank everybody for listening. It's great that we have the listeners that we have.
Yes, it is. I'd like to kind of continue on the same line we were on in the last segment. And there's something about the IRS and cheating on your alimony. This is all very scary. The more we go through this, the more the IRS seems to be able to...
It's really about computers, right? And
how easy it is for them
to compare. So they compare. So if I pay alimony to somebody, alimony is deductible, so I can deduct it from my taxes. But the person who receives alimony, that's income, and they're supposed to pay income on that tax. And so a lot of times people don't report it as income. And so now the IRS is comparing from the person who pays the alimony to the person who receives it and says, wait a minute, there's a discrepancy here. You're not reporting that income. And it's so easy to do. Now with computers
this is that's the line that's going through all of this, is that they're able now to do like algorithms and things to find revenue that they never have, and they're already at record amounts of revenue coming in.
It's never enough. It's
just never enough to feed the big monster called the government.
I agree.
And so, we'll
talk more about that next week. Obviously, we always talk about the IRS, and we'll continue our saga, I'm sure, as the IRS turns.
They give us content every week. It keeps adding up.
That's scary. It is scary.
It is scary. And
I have to say that this is a lot. Again, this is the same thing with this comparing. If you are in two homes, father, mother are divorced, and there's always a big fight of who gets the deductions from the children. And if you both take them, that also puts up a flag, and then the IRS does an investigation to find out where do the kids live, because wherever the kids live more than 50% of the time, that's who gets the deduction, absent an agreement with a divorce decree or something. That
reminds me, this is kind of like I said, the line there, it's like the FATCA thing, where now they're going overseas, and what did we read today? Over 77,000 banks and institutions worldwide
have registered
with our IRS to turn everybody. They're throwing everybody under the table. They'll under the bus, and they're going to give they're going to give your records out to where the people used to think.
The 77,000 financial institutions and banks, foreign banks and financial institutions, have received a global intermediary identification number. So now they have their own Social Security number, and in effect, and they have to register and get these numbers from the IRS, and then they have to report all United States citizens who they do business with, which really discourages them from doing business with the United States.
Well, they used to be able to do all overseas accounts and be able to hide things, and you just go to your Swiss bank account, you'd be able to hide. There is no more hiding.
Well, that's how powerful our IRS is that it's scaring 77,000 foreign banks into compliance. Even foreigners are afraid of the
It's
IRS.
really the government, because the government is telling them either you listen to our IRS or you don't do business in the United States or with the United States.
So if you feel like the IRS is coming down on you, you need help, and you should call me. And you should call me at 312-664-6649. You can visit my website at chicagotaxteam.com. Look at the blog. There's lots of information there. So if you have questions, you can get information there. So I want to thank all the listeners. I want to thank Debbie, for our producer here,
Debbie,
for helping us. Can't do it without her.
Every Sunday at 5 o'clock, this is where you'll find us.
And I hope we can find you here, too.
AM560, The Answer. See you next week.
And thanks for listening.